Everyone, welcome back to today's edition of Luxe Ledger. In today's edition, we are going to discuss a couple of things related to Matches Fashion, Victoria's Secret, and Tiffany and Company. Let's start with the Matches Fashion. Now, if you remember, Matches Fashion was purchased by the Frasers Group approximately 2 months back, before the end of 2023, and it had been purchased by the Frasers Group for £52 million. And at that time, it was said that they're going to keep running Matches Fashion. And although it was purchased for just £52 million, which is like almost minuscule of the valuation of what Matches Fashion was at a point of time, especially when the Apex partners had purchased it, it was somewhere around $1 billion. Now, in the latest news which has come today, it is said that the Frasers Group is going to be putting the luxury online retailer Matches into administration, which is just 2 months after buying it at a knockdown price from Apex partners. And while all the statements that have been given say that, as per the due diligence that has been done, Matches Fashion has been trying for a turnaround for quite some time and it has not been able to achieve that as of now. And because of that, it is being put into administration. But there are some experts which are noting that although the Frasers Group at that point of time said that they are not going to be doing this, but this is what Frasers Group does is it tends to buy brands or retailers at a discount, and then if it does not see that it's going to be able to turn around those, then it kind of shuts those down and integrates whatever retail or brand partners it can integrate into its current crop of portfolio. And this kind of lets us ponder into what the luxury online retail is going through right now. So we had Matches Fashion, which was sold at almost a throwaway price. Similarly, we had Farfetch also, which was also sold to Coupang last year, and it was also almost sold at a throwaway price for just about $500 million. And the thing was that both these companies at one point of time were valued in over $1 billion. And if I remember that correctly, Farfetch was valued approximately at 25 billion at one point of time, especially during the pandemic, wherein everything else was shut down and all the channels had actually converged to just online. And for luxury, that online retail channel became very important. And it's only after that we saw a lot of luxury brands and luxury conglomerates like LVMH, Chanel, Prada, Hermes, etc., kind of investing in an omni-channel presence wherein they could have interactions with their customers through their retail associates in a very seamless way, wherein it could start from the online, go to retail, then come back to online, then come back to WhatsApp. So one of the good things was that, but the problem is that the retailers, the brands themselves kind of adapted much better to it than the luxury retailers which are dependent on the brands for selling on their platforms. And also because of a push from the luxury brands to make everything direct to the consumer, they have reduced the kind of stock that they sell on retail sites, whether it is online retail, whether it is offline retail. So that has also one of the things that is happening within the luxury retail. Now, this brings us to the second point, which is Victoria's Secret. Now, Victoria's Secret had a better than expected fourth quarter, but still, when it unveiled that for the next year, that is 2024, it is going to downgrade its expectation a little bit from $6.2 billion in revenue to just $6 billion. It had a huge backlash and its shares fell approximately 30%, despite posting better than expected profits. And this is what the analysts are saying, that this means that the turnaround is not going as well for Victoria's Secret as they are saying. And also, this fall led to a cut in the company's market capitalization by approximately 590 million to 1.4 billion as investors weighed in on the company's future. As I mentioned before, Victoria's Secret expects the sales to fall from to just 6 billion this year from 6.2 billion in 2023. And because of this has come as a letdown for the investors, and what they are reiterating is that it's not able to capture its market share back from the brands that have been eating into Victoria's Secret market share, and at the same time, it is not performing well in terms of profitability either. So that's one of the main reasons why Victoria's Secret is facing the kind of decrease in stock, as we can say. Now, with respect to net income that I was talking about, now net income has ticked up 4.7% to 181 million from 173, and the adjusted earnings have per share of 2.58 came in 12 cents ahead of 2.46 as was expected. And the net sales for the 3 months, they have rose by 3% to 2.1 billion. Despite all that, Victoria's Secret did not have a good showing on the Wall Street. I also wanted to mention that within the plans of turnaround, Victoria's Secret is also thinking of making its brand available on Amazon. This was something very new for me, and we'll see as to how it goes for Victoria's Secret, especially once it starts listing on Amazon also. And lastly, what we wanted to go through was about Tiffany. Now, Tiffany and Company is ramping up its production with a new factory in France. Now, if we go through the article in itself and the press release, what was put out by Tiffany and Company, uh, what has happened is that it has, because of the vertical integration that a lot of luxury groups are doing right now, especially during and after the pandemic, wherein they just realized that they were so dependent on their suppliers, and if something happens to their suppliers, then basically they will have no products to produce. Similarly, they are investing in terms of the suppliers, and they are investing in terms of the workers also, the craftsmanship which the luxury brands tout in almost every advertising. So what has happened here is that LVMH is increasing its production capability for Tiffany, especially given the growth targets for Tiffany and Company, and seeing the 5-year growth targets that can be achieved. So this is one of the statements that was put out, that when we saw what the needs would be for our 5-year growth, we saw investing in this sector was necessary. And also, as you mentioned, that this particular factory, it belongs to a supplier which has been acquired by LVMH, and almost 50% of the business of the supplier comes from LVMH owned houses like Louis Vuitton, Dior, Tiffany and Company, and a lot of the business also comes from competitor houses, for example the companies of Richemont and the companies of Kering, and that's a very delicate balance to maintain. That is something very new for me also, to understand that basically they're using the same suppliers, and even once the suppliers have been acquired, then also the same suppliers keep producing for competitor brands. I will delve deeper into this, and I will do another video on the vertical integration that the luxury conglomerates have been undertaking for the past couple of years, especially starting around the time of the pandemic. So that's it that we have for you today. I hope you've enjoyed this video. Do stay tuned in for the next one. Thank you.